Investors who don't fully understand financial terms panic and lose money when prices fall because they think they're just seeing a decline. What they're actually seeing is the market's biggest trump card and game. Furthermore, volatility isn't just about risk. It shows how quickly and over what range an asset's value changes. What matters is not the direction of the price, but the turbulence itself. This video will teach you not why this turbulence occurs, but how the biggest players use volatility to increase shareholder value. For example, do you know why 60% of the market consistently loses? Because volatility is a hidden market tax paid only by the uninformed investor crowd. Just like the 60% employee turnover rate in the retail sector, volatility also functions as the market's churn rate. Uninformed investors are weeded out of the market with a high churn rate when the shakeup begins. Volatility forces this 60% segment to sell their assets far below value by creating fear and panic selling. However, the churn rate of professional players is only 5%, because they have the ability to see this shakeup not as chaos, but as a massive business opportunity. High volatility is actually a mechanism that gentrifies the market. It is the market's way of saying, "We don't want you here," to weak and emotionally driven capital. This causes the power of uninformed and inexperienced capital in the market to melt away, leaving only the strong to survive. To put it more plainly, the law of the jungle prevails in the investment world. Those with knowledge and capital can defeat anyone else, regardless of their capital or knowledge level. So, what is the real purpose of this wild system? The largest investors use volatility not as a passive risk, but as a business model to create shareholder value. When prices drop below their value due to an overreaction, it's not a catastrophe. It's an opportunity to accumulate assets at a discounted price. They reap the greatest profits from this process that cleanses the market. Managing volatility means learning the language of financial markets. Now you know, volatility is not a terrifying shock, but an opportunity to learn the market and make profits. You will be the one maintaining your composure during those moments of panic. Don't forget to subscribe and turn on notifications to learn the language of the financial world and become an unshakable investor. In the next lesson, we will explore the concept of arbitrage, which disrupts the invisible equilibrium of markets.